Good afternoon, and welcome to Compass Diversified's first quarter earnings recap. Earlier today, we reported earnings. They were record earnings. We had double-digit sales growth in both our branded consumer and niche industrial businesses. And this is against a backdrop of GDP, which contracted 1.4% in the quarter. Our performance was really exceptional this quarter. We produced the highest quarterly EBITDA in our company's history at $108.5 million and a record adjusted EPS. Within that, our BOA Technologies business set a record for us this quarter, producing the highest ever EBITDA for one of our companies in a quarter at $25 million. BOA continues to benefit by having great disruptive technology, a great IP position, and management that is executing extraordinarily well, notwithstanding these difficult conditions. I also want to point out that Lugano, our newest acquisition, which we acquired late in 2021, continues to perform well above our expectations, with EBITDA growing almost 50% in the first quarter. As we had mentioned numerous times, we see a direct correlation between the amount of inventory investment and the amount of profitable sales growth that we're able to achieve. And that correlation actually got better in the first quarter. And we plan on continuing to invest additional inventory investment going forward, enabling further revenue gains as the year unfolds. Based on the strength of the first quarter and the positioning of our companies and our expectations, we are raising our guidance, notwithstanding all of the macro headwinds that we see right now. We had guided originally to a range of $400 to $420 million, and we are upping that by $10 million to a range of $410 million in subsidiary EBITDA to $430 million of EBITDA. Our balance sheet remains incredibly strong. We last year put $1.3 billion of bond financing in place. That is 8 and 10-year duration, and that is all fixed rate. So we have no interest rate exposure where we stand right now, and that capital is long dated on our balance sheet. We have a full access to our revolver, which is $600 million with nothing drawn, and we have the ability to upsize that by $250 million. So we have the ability to continue to invest in our subsidiaries and also pursue acquisitions as they become available. I'll finish by saying the challenges that we face today remain acute. Supply chain problems that we've been talking about for months now remained very difficult in the first quarter and are not abating. Labor shortages continue to remain. We had, I think, the highest level of job openings in history that were just reported this month. And as we all know, inflationary pressures are expected to continue and are at 20, 30-year high levels right now. And so those pressures continue, but yet we produced an extraordinary first quarter. And I want to thank everybody on my team at the management company and all of our subsidiaries. All 10 of our subsidiaries executed at an extraordinary level, and that's due to the strength of the management teams and all the employees that we have there. And so I want to give them a well-deserved thanks. Look forward to seeing you in our next broadcast after Q2 earnings. Thank you.